The markets are conflicted right now. If we look at the US Chicago Purchasing Managers Index, you can see that they forecasted for a 50.6 reading, but it actually came up at 62.7. The PMI tells us the manufacturing health in American business sector. And while people thought that this would come at a low reading, it's flashing a lot of strength. Then we have Brent crude breaking down from this ascending wedge pattern, showing that if this goes down, it will be really good for inflation. But at the same time, America is burning through the emergency reserves to keep the price low. SPX is sitting all-time highs, and we've been sitting here telling you to celebrate. But compared to gold, SPX is just coming towards setting a local high right now and nowhere close to its 2022 all-time high. A lot of conflicting stories are currently happening in the market, and how this particularly positions for other assets such as cryptocurrencies, Bitcoin and Ethereum. We'll cover all of that in today's video. Hello everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once. Now, into our end of week session. The first point of news that we're going to start off with is relevant to the war itself. Now, the US forces actually have fired at a ship, and basically it was a cargo ship they claimed was attempting to breach the naval blockade of Iran on Saturday. They were waiting for the US president to respond to a proposed peace deal, but that went nowhere at the time, and this particular ship did get fired upon. So not particularly close towards the end of this particular war, and we've been telling you that throughout. But in this particular matter, for a potential deal with Iran, the meeting has concluded, but no decision has come from it. You can see over here that Trump has not announced a decision after concluding a 2-hour meeting with his advisors on whether to move forward with a deal to extend the Iran ceasefire and reopen the Strait of Hormuz, which basically puts the market in a bit of a limbo situation. When we look at oil over here, I want to sit here and I want to tell you that this is good news. And from a general perspective, it is, because if oil prices go low, that is very good for inflation. That means that people can do their general tasks, traveling, transportation, and all these things a little bit more easier. But what you're not seeing within this particular chart is the relevant emergency inventories that America is burning through to be able to keep prices at this particular level. So when we have a look at this particular news event over here, Trump is currently draining the nation's pile of emergency oil at even faster rates than what Joe Biden was doing. This is a bit concerning because now they are reaching reserve levels of about 1980s. And you can see over here that they have taken out about 12% of their emergency reserves, which is about 50 million barrels, putting them currently at 365 million barrels, the lowest since April 2024. And gas prices are comparatively hitting very strong highs as well, which means from a fuel economy perspective, we're at really concerning prices for both oil and gas. So although the narrative is there, and although this could be the market pricing in future impacts to say, okay, oil is going to go down because likely a peace deal is going to happen. And if that is the case, great. Because from a short-term perspective, if the Strait of Hormuz does open up due to some kind of deal for further talks, like we chatted in our last video, how the memorandum of peace could actually benefit towards putting that 30 to 60-day extension open the Strait of Hormuz, and what the uranium transportation from Iran out to America and China would look like. But until now, for the sake that the war is going to end and it's pricing in future impacts, this is great. And this particular chart pattern can then play out perfectly to even go down to the $78, $80 levels if it plays to the textbook. If not, then we could be looking at ranging higher and keep on moving upwards. But on some good news at this channel, we do cover the PMI, which is the Business Manufacturing Index, telling about the health and economy of manufacturing in America. And for Chicago itself, it has come at a very strong high of 62.7. The index is showing a serious amount of strength when it was supposed to be forecasted at 50.6, but it's actually at 62. And we're expecting America's reading in the next 48 to 72 hours as a whole. And if that comes up positive, last time it was 52. If it comes at 55 or above, this is going to be very good for the markets because they're going to see growth in American manufacturing. And obviously, a little bit of those pricing effects are flowing through to the SPX. You can see over here, we're making all-time highs again, which is great. In other areas, such as gold, which has recently been going down, crypto, which has also been going down. So people are saying, okay, cool, let's rotate everything into the AI narrative, into the stock market narrative, the GPU narrative, to basically fund and push the SPX higher. If you found the PMI analysis pretty cool, drop us a like over here. That will go a long way. And for today's comment, put Chicago PMI. I would love to see who has followed along until now. But here's my challenge, and here's where I don't want people to get lost over here. Because even though we have a lot more room to the upside over, a cause of concern to me right now is that even though the SPX is hitting all-time highs, comparative to gold, it's not really there yet. And when we look at this particular chart, comparative to gold, we're actually just coming towards hitting local highs over here. But our all-time highs for the start of January of 2022, we're nowhere even close right now. So although people are getting excited, that generally has a lot to do with the evaluation to the US dollar itself and how the US dollar has lost power over time, but not particularly in terms of hard assets such as gold. And you can clearly see that story and that particular narrative over here as SPX is trying to gain strength against gold. Now, you can see also over here due to the MACD changes that each time the MACD is flipping bullish, it's having a bit more of a stronger momentum. And the last two times it happened, it actually went to the 100-day MA as well, which was a fairly strong signal. So at this particular time, we still could have some move upwards. The market can stay unreasonable way longer than you can stay reasonable. So keep that in mind if you are expecting some bearish price action on the SPX that we might not always get our way. But we have seen the strength of gold, and gold in the span of nearly 2.5 years moved 184%. So the SPX has a long way to go before it can signal strength and show that it can gain strength over gold. But while a lot of people have been allocating towards the tech and stock area of the American sector, one sector that's extremely been taken away from is Bitcoin. You can just see over here, so much of the tech or forward on-looking areas are doing great, but cryptocurrencies have been put on the back burners. If you have been keeping up with the ETF flows and data, from a BlackRock perspective, they've had billions flow out in the last couple of weeks, and that's not been really positive for the community or the markets of cryptocurrencies itself as a whole. But we were talking about this particular chart pattern, the ascending wedge and the bearish flag. From my charting perspective, we are still in the bearish flag over here. We went from this ascending wedge, we're going down. We're currently finding support on the 100-day which is great. And if we can hold that, that would be great. But I do have a belief that we actually do have room to move to the 69,000 level downwards. And that's my bearish price target on this particular ascending wedge, at least a safe target. We could even, at worst case scenario, have a move to the $62,000 level. But right now, I do see the $69,000 as a reasonable bearish price target for us to come down to. And there's a couple of reasons why I have that. First of all, I'm a little bit of a conspiracy theorist, and I do believe we're coming to the end of financial year, which basically means that institutions can claim capital losses on their crypto, which basically means if they're selling their ETF right now at a loss and gaining money on, let's say, the SPX, then they can sell Bitcoin at a loss, buy back their particular positions while getting their returns on the stock markets, such as your SPX and your Russell, and basically be able to earn reasonable amount of profits before possibly rotating as of July when the Clarity Act could get signed. But until that comes into fruition, we kind of just have to look at the price action. But because we're a small YouTube channel, sure, why the hell not have some conspiracy theories? Because that's what we're here for. But why do I think that 69K level is a reasonable price target? Well, when you look over here, in terms of some bearish price action, we have been rejected by the 200-day MA. And if we're rejected by the 200-day MA, that means that we are still in a bear market. That's simply how it goes. And there's really no point debating that because the price action has pretty much shown it to the downside. Another chart you're going to see over here at the bottom is this particular red and yellow chart. This particular chart is known as the short-term holder cost basis. It basically tells you the instances where short-term holders are in a profitable area from an average perspective versus at a loss factor. And when we were at the price factors of about 78K, you can see we flipped on the yellow side, but now we're back in the red. And when that goes back into the red, you generally have a particular trend action or a bearish price action known as apathy. So basically, the price action is fueled by apathy, where people are already in distress. And basically, they just say, okay, I'm going to sell it now because I was just about to get into profits at 78K. I couldn't hold my profits, so I'll take a little bit of a loss now and exit and go into the SPX or whatever is the best moving tech stock or tech narrative right now. And if we look at the monthly chart on Bitcoin, we've told you guys multiple times that this particular red line has been a point of support for a very long time. And if you see over here, this particular red line just sits at about 69K or odd for this particular month and the start of next month. So if we do come to this particular point of 69K to touch this particular red line, that's very much in line with where my bearish flag pattern sits for support. If we just want to range in this particular area before we decide to move upwards or downwards. And I don't think we break through this particular multi-month trend line. If we look at Bitcoin's liquidation map as well, we can see we still do have cumulative liquidity of about 1.4 billion to the downside. And in a state or structure of apathy, right now, we could touch those zones of 69K if we need to. Ethereum, on the other hand, very similar story as well. You can see we are in this wedge pattern. We have been trailing sideways. If you're an Ethereum holder and you have been for 5 years, I feel you because I'm an Ethereum holder too. And it's really struggleful to look at this particular chart and be hopeful. But I have belief that very relevant to the XRP chart that Ethereum could have its break to the upwards someday. But right now it's at this particular position. And if I had to prepare myself for the downside price action, you would see over here that the next downside price action currently does sit at the 1800 level over here as well, which at that 1800 level, you can see over here when we look at long liquidations and short liquidations. For long liquidations, these little bars over here, the bar chart that show us major liquidities, it pretty much ends at the 1800 mark. So there is liquidity for long liquidations for us to go down to that 1800 level before a lot of liquidity, and we referred this in our last video as well, and we have been for a while, of 7.5 billion or so moving towards the 2300 level. So we do have a lot of long liquidations to the upside, but short liquidations and relevant to the chart's price action. Right now, the 1800 level for Ethereum is looking like an opportunity where it goes down to before we look at deciding, are we going to break a multi-year price pattern? Are we going to break down from that? Or do we decide to change directions and move upwards? And on that, I will pass it off to Steve to show his discussions regarding technical analysis.
Well, thank you very much, Yash. As always, fantastic presentation and a great candid presentation in relation to cryptocurrencies. It's a bit of a quagmire. We're really stuck in this range, left, right, and center, up, down, not really deciding exactly where to go. And you can really see that from these charts coming up right now on the screen. Bitcoin has really just been testing this area down here in terms of this 4-hour support resistance line at the 72,250 mark. We had a couple of tails down there on Thursday and Friday, and it tested that area, bounced right back up above this pivotal support resistance line there at 73,100. And now we're sitting back on 73,650. Where it goes from here, well, we're hanging around above the 100-day moving average like Yash had mentioned in his presentation, but we're below all the short-term moving averages and below both of the VWAPs. So at the moment, we've got a fair amount of weakness. Now, if you cast your mind back to last week's presentation, we were looking over at the left-hand side in terms of the Ichimoku curve. When we take a look at all of this over here, the lagging indicator on the left-hand side, you can really see lower highs and lower lows testing around all of these support resistance areas. And that's exactly what's going on right now. We are still forming this lower high, lower low tendency until this particular type of trend with a lagging indicator actually breaks and starts actually forming higher highs and higher lows once again and starts bouncing off all of these particular support and resistance line areas, then we'd actually start being able to have a little bit more surety that it's actually finding its base form, more of that base, and then bouncing off that base. At this point in time, we're not really seeing that. All we're basically seeing is tests of these support and resistance lines at this point in time. You can see that on both sides of the chart for Bitcoin, but we're not really seeing any surety in terms of follow through to the upside right now. Whether or not that's because of the weakness we're seeing in Ethereum, which we'll flip across to now, that is probably the reason why everything is really remaining stagnant. Ethereum seems to be that anchor once again. And we've mentioned that over a large number of videos in the past as well. With Ethereum being that anchor, we're really just dragging downwards and downwards and downwards. And all we're seeing in terms of the charts are lower highs and lower lows in terms of the unit price when it comes to Ethereum. And that just seems to be the continual follow through. You can really see it very clearly in terms of the short-term moving averages in terms of Ethereum. All we're seeing is complete and total tracking along in terms of the unit price. And Yash captured it extremely well in terms of the overall weakness with Ethereum as a general theme. We've been talking about it quite a lot. You can go back in terms of numerous videos in terms of that magic number of 2100. And that's that blue line we've had there ever since April 2023 in relation to the support line, which is now acting as a clear resistance. And we've had tests of that all the way through here ever since around about mid-May. Then the complete failure of that over the last week and a half. And essentially now we've got the complete tracking downwards, and whether or not we'll actually even be able to get back above that area is going to be the real test to really see exactly what does happen. Now, remember, in relation to Ethereum, this is literally the leader of all of the altcoins. This continues to fall and continue to keep on going. It's only going to be exceptional news amongst a particular altcoin that's going to actually propel that and get that going upwards. Otherwise, you're probably going to have all of the altcoins themselves dragging themselves down completely and keeping on going. It doesn't really matter at the present time anymore in relation to the performance of, say, the Russell, which overall, like we were mentioning midweek as well, had literally been going in lockstep with a lot of the cryptocurrencies in terms of a good correlation, because as the Russell itself was going up, so were the cryptocurrencies. That correlation is no more. So essentially, we can't really rely on that anymore. When in terms of trends overall, basically the trend is a trend until it ends. And that is pretty much the best motto to think about in relation to stock market investments or anything along those lines at all. So in terms of the trend itself there, it is no more in terms of that correlation between the Russell and cryptocurrencies. It may come back again. We'll wait and see. We'll keep an eye on that in terms of this channel as well too. And if you find that useful, feel free to follow us as well, and we'll make sure that we keep you up to date with what's going on in terms of any of the trends that do go on. But let's now take a look at the indices itself anyway. The Russell itself had reached all-time highs this week. So had the Dow Jones. It actually finished at all-time highs at the end of the week. And you can really see how nicely that actually is too. The SPY, same situation. All-time highs, especially at the end of the week. And the Qs, being the technology-laden index itself, exactly the same thing. Now, we were talking about this during the week as well, and basically saying all pretty much overstretched, everything away from all the short-term moving averages. Market doesn't care right now. Okay, we're 100% honest with you. The SPY itself has now reached new highs for 9 weeks straight. The market is not caring in terms of everything just keeping on going up and up and up and up and up. And you can see that especially here from the Qs, we've been basically reaching all-time highs or going in terms of new highs all the time ever since April. Will this keep on going? Who knows? It might not. Either way, it's a matter of making sure you keep a good, close eye on any positions that you are in, and making sure you use good risk management no matter what you do in terms of any position you've got going. We could have this keeping on going strong and strong and strong all the way through, and it could keep on going for a very, very long time indeed, depending on how long the bulls like to keep on things charging. The other aspect we'd like to keep an eye on as well, especially in terms of Dow theory, is the Dow Jones Transportation Average, which, as you can see, is actually also drifting upwards as well, which tends to support Dow theory overall in terms of the fact that all of these things are starting to move upwards. Personally, I would like to see this at all-time highs as well, complementing all of the indexes as well. Not the case at the present time. However, the mere fact that this is moving upwards in alignment with all of the indices as well is showing additional strength. On top of that as well, the fact that the volatility is actually declining continually as well is also showing further confidence in the markets overall. The dollar is below that former resistance area that we were talking about from back in December. If this was higher, up over here above this level, you would be thinking that there would be more risk and less people participating in a rally. So overall, that's also complementing more risk on in the market. So that's also something. On top of this as well, we also have stronger interest by institutions in terms of the bond market. And that's represented by the TLT. You can really see that everything is pointing for more participation in the markets. That can be a good thing in terms of supporting the markets overall. In addition to this, interest rates themselves in terms of the 10-year bond yields is coming down and easing. More support for the markets overall as well too. So everything's indicating pretty good so far in terms of markets going very, very well. Let's now take a look at Brent Crude, which is another aspect that Yash was talking about. Further easing in terms of Brent Crude prices at this point in time, like Yash was indicating. Yes. However, there is something I'd like everyone to be really aware of in relation to all of this as well too. Because even though we have actually got everything below the quarterly VWAP, which is that purple line right here, and the yearly VWAP, which is that green line here, that indicates that there is less buying pressure and more like the sellers are in control at this point in time in terms of Brent Crude. Okay, keep that in mind. On top of that as well, we're below both of the 4-hour support and resistance lines that we've been talking about ever since March. Okay, that's 2 points. One thing I'd really like to draw your attention to, though, is this potential support level, which could actually be here at the $90 level. I'm going to switch charts for just a second. I'm going to switch in particular to this chart, which is just a straight Ichimoku curve over here in terms of a big, broader chart. And the reason why I'm doing this is there is a potential support level here at that 90 level based back on March the 10th, drawn at this area here, which is the open from there at the $90.10 level. You can see that at the top in terms of what the open price was of the day. Isn't it interesting how that actually draws line in parallel with what this purple line is here, or pink line or orange line, depending on your own screen resolution? That line here, which is the base of the cloud. So it actually lines up perfectly with that line. So that could be a potential support area that this unit price could come down and test. Keep that in mind as a potential area of interest should the unit price come down to that 90 level for Brent Crude. I'll leave that as a potential thought. It might not, but it's just an area of interest that traders could actually pick up on, and we might see some action around that area in the future. Food for thought. Now, in terms of USO, United States Oil, if Brent Crude did come down to about $90, it could come down to probably around about here, I'm beginning to think as well too. It's about $119.50 in terms of US oil. That's just your food for thought area there as well. Do note that that is around about halfway or 2/3 of the way down from the quarterly VWAP and still above the yearly VWAP. Now, you're probably saying, hang on, Steve, didn't you just say in terms of Brent Crude that we're below both the quarterly VWAP and the yearly VWAP? Yes, indeed. We're not below the yearly VWAP in relation to the USO. So at the present time, we have mixed signals in relation to a comparison between Brent Crude and USO. And that's the reason why a little bit of caution still needs to be present in relation to an analysing oil at this point in time, and why there might still be a lot of uncertainty in relation to all of this. Just something to think about. Now, in terms of that as well, have a look at this chart that I actually brought up earlier in the week in terms of uranium as well. This is showing a lot of mixed signals. At the present time, we've bounced off the 200-day moving average. We're currently testing at the present time the 150-day moving average being the orange line, and we're well below the blue line here being the 50-day moving average. And we're smack bang in between the short-term moving averages at the present time of the yellow line being the 8-day EMA and the 15-day EMA being the cyan line. As you can see, it's a mishmash. So really, we don't know exactly which direction anything's going to go here at this point in time in terms of uranium. And remember, uranium is the big element in question at this point in time in terms of the war, in terms of Iran. So there's a lot of things going on at this point in time that we just haven't got any 100% certainty about right now. So there you go. Quite a lot of things to take into account that we still don't have 100% certainty on. But at this point in time, the stock market's looking pretty decent, and a lot of people are still very, very jubilant, and everything's all going hunky-dory. Everyone's all 100% happy. Does that mean that we're going to be going along and going on all cylinders for now? It could. And put it this way, People get jubilant. People keep going strong for quite some time overall there. Do we make predictions in terms of targets all the time? I don't personally. I don't like making targets myself. I just follow the trends. That's my own personal belief overall. But then again, I'm not a financial advisor. I can't make financial advice in terms of this particular channel overall. You can only take a look at your own positions and basically take a look in terms of the way that you actually manage your risk overall. With that, mate, handing it right back to you. You can have a look at the concluding remarks for us, mate.
Thanks for that, Steve. And like I said earlier, guys, the markets are really conflicted these days because SPX keeps hitting all-time highs, but against gold, we're nowhere close. As Steve highlighted, bonds are looking a little bit better, which is really the control America really wanted to bring back, and oil prices are going down too. So in front view, that looks great. But what's happening behind the back, you really got to question. So until unless we get this war into order, the Strait of Hormuz opened, and a couple more things that could ease some pressure, that's going to look very good for the other half of this particular year. But for now, we're just monitoring and we're just seeing how things go. Because to be honest, even though the SPX keeps moving high and that's got something to take back strength against gold, most likely, there's still a couple of trend and indicators that are not showing strength yet, especially for the crypto markets, where we can see that it's just been a bit of a bloodbath. But on that, we've definitely appreciated you joining along for this particular session and journey. If you've liked what we shared with you, please drop us a like. It goes a long way and encourages us to keep going. If there's anything you would like us to do differently or change up, let us know. I believe the word for today was Chicago PMI. So put that down in the chat, and that would be great. Thank you, Mark, for your ongoing support.
You're a
And,
legend, Mark.
and on that, we will see you on the next one.
See you soon.